that was kind of like a more heartwarming. I don't want to call it heartwarming, but heartfelt a little bit. But maybe I should have saved that for last, but I still want to talk to you about, what this means for our portfolios, right? Let's talk a little bit about what's working, right? And what's not working as well. So just curious, you've been a big proponent of international diversification, geographical diversification. So avoiding that home country bias. Can you talk a little bit about how that's turning out today?
Yeah. So, the start of the year, very encouraged, kind of see somewhat of a rotation in terms of international market strength. It's certainly the cheaper part of the global landscape in terms of investment opportunity. The European region was doing quite well for us. That has all but been, removed and has kind of shared in the year-to-date sell-off in terms of order of magnitude to where the US already was and is. So we were holding our heads high about some international outperformance and kind of kicking myself right now a little bit in terms of getting high a little bit too soon on that. But at the same time, it goes back to, is the sell-off in European equities because of the underlying fundamentals, or is it because of sentiment and just a risk-off attitude? And I would argue that there are a lot of businesses, that our managers are purchasing where this has absolutely nothing to do with trade with Russia or supply chain disruptions or interruptions. Yes, there are some segments that will feel near-term pain, but as a long-term investor, we already saw those regions as cheap and attractive, and that kind of compounds this phenomena, assuming things don't get, existential crisis bad.
Yeah.
Emerging markets, kind of sharing in the same sentiment in terms of a risk-off attitude and that sentiment trade. But nothing on the equity side of the portfolio for me has categorically changed. That can shift, obviously, in time. On the other side of the portfolio, our diversifier sleeve, we made some changes last year that we had no idea this type of inflationary pressure was coming. We had no idea necessarily that Russia was going to invade Ukraine, but buying into commodities, buying into metals, buying into global natural resources, and increasing a position that we've held for a long time, pretty much across the entire client base, has been the shining light, or the thing we're most proud of, and one of the reasons why we're holding up as well as we have year to date. And at the same time, though, that's also a sentiment trade, because you see what's going on with crude oil. If I had a gun to my head and had to predict where crude is in a couple of years, it's certainly not where it is today, right? And so we'll take it while we can. I think it's important that we, trim some of that fat and we rebalance out of that strength, and we use it to buy equities while they're oversold. And that's kind of where we're at today.